to listeners, I mean, it really is all about like, first of all, you have to decide and you have to believe that you can achieve it, whatever you're putting your mind to. You have value, and there are other people that don't want to do what you're doing, that you like doing. And it can change. Like you said, in the beginning, I wanted to do it all. And then now I'm 52. My wife and I bought an RV. We want to travel. Like, I don't want to do it all. I want somebody else to run the day to day.
In this episode, I talk with Darin Batchelder. Darin is a multifamily investor with over 9,000 units. He's a published author and podcast host. We discuss how he transitioned from loan trading to real estate investing, how he went from his first deal as a duplex to investing in a 76-unit multifamily property, the proper way that you should approach seeking to partner with experienced real estate investors, and we touch on the real estate market outlook over the next 12 to 18 months. I hope you enjoy. Now here's the show. How you doing, Darin?
Very good, Chris. Thanks for having me on.
Absolutely. It's a real pleasure to have you on. Let's just kind of jump right into it. You have an interesting journey in how you got into real estate. You definitely did a lot of stuff before getting into the real estate industry, but it seems like loan trading was kind of your starting path into the real estate industry, and you've traded like $4 billion or over $4 billion in loans. Can you explain a little bit like what is loan trading and how you found yourself trading loans?
Sure. So if you've ever had a mortgage and all of a sudden you got a letter saying, hey, next month, don't send your payment to ABC Bank, but send it to XYZ Bank.
Mm-hmm.
There was probably a salesperson that sold a large portfolio of loans from one bank to another bank. And so that's basically what I was doing. I was working for ABN AMRO, Dutch bank. This is back 2002 to 2006, and trading large portfolios of residential and multifamily loans. And so, the reasons for some banks are really good at raising deposits, and they have a lot of deposits, but they don't have enough loans. So they'll buy loans from somebody that's really good at making loans. And so the seller will book the loans as a gain, and the buyer looks at the loans as an investment in a portfolio.
Yeah, I remember when I bought my house, my first, actually I bought investment houses before I ever bought my own personal residence. But when I bought it and you go through all that paperwork, and I swear it wasn't 90 days before I got that letter. I'm like, well, what's going on? Like, I talked to you, but now I got to talk to this other person. I was like,
right. Some people like take it personally. Like, what did I do wrong? I paid on time. It's not anything personal. That it's just one bank had a different need than the other bank.
Yeah, and it seems like Wells Fargo is one of those big players where, and Bank of America too, where they tend to buy up a lot of those loans. So you have all these originators on the lower level. Essentially, they're sales folks, right? They're out there selling money, but they're doing it in a way that conforms to the standards that the larger banks want, so they can just package them up and sell them, right?
Absolutely. Yep.
So how did you find yourself going from that to actually, jumping on to the investing side of real estate?
Yeah. So it was interesting. I'm older than you are. I'm 52. I got involved in the real estate game probably 47. So about 5 years ago. And, so after I left ABN AMRO, I started my own company. I still have that company that trades loans. So, but I heard for years, presidents and chief lending officers tell me they love the performance of multifamily loans, both in up markets and in down markets. And, I heard it year after year after year, but I didn't go out and buy any real estate. So finally, at the age of 47, I told my wife, I'm like, man, I'm going to go out and buy some real estate. And so we bought a duplex, and then I wanted to go bigger. And so I joined a mentorship group in Dallas, and then did a 76-unit syndication. And then, I've been partnering with other folks that have been 200, 300 unit type deals. Yeah. So it's crazy. One thing leads to the other.
Yeah. So you went from more as a job on the real estate side into owning a duplex, and then straight into large multifamily. That's a pretty big jump.
Yeah. So the biggest thing I would tell you and your listeners is that surround yourself with other people that have done what you want to do. So when I joined the mentorship group, all of a sudden I was in a room with a bunch of people that had done 100 unit, 200 unit, 300 unit deals and multiple ones. And I was like, these are smart people, but if they can do it, I can do it. Right. And I didn't even know that that existed. But once I was in the room, it opened my eyes and I was like, I can do this. And so then I just put my focus to it. But if you just surround yourself with people that have not invested in real estate, it's very hard to believe that you can achieve that.
Yeah, and I mean, you don't know what you don't know, and I think what Stephen Covey says, you're the average of the 5 people you hang around with most. And Tony Robbins likes to say proximity is power. And I shared in a newsletter a couple of weeks ago that proximity of power is power. It's not that difficult to do. I mean, there are free meetups all over most metro areas that you can get in proximity with people that are doing what you want to do or have been where you're trying to go. And then there are mastermind programs and coaching programs that you'll pay to get into those rooms, but typically there's also a higher caliber of folk, people that are in those groups, right?
Absolutely. And I was a pay to play. I joined a paid mentorship group, and some people were like, Darin, man, why are you doing that? You have all this experience trading loans. And I'm like, yeah, but I've never bought an apartment complex, so that's who I want to be around. And I probably could have done it without being in that group, but it probably would have taken, it took me a year to get my first syndication deal closed. And it probably would have taken me 3 or 4 or 5,
And was
I
that as
probably,
you as operator?
that was me. I partnered with another gentleman that I met in the multifamily group,
Mm-hmm.
Raj Gupta out of Chicago. And he had the experience that I didn't have buying apartment complexes. And so we partnered on that, and then we raised capital for that deal and from other limited partners.
Can you elaborate a little bit more on that? Because a phrase, I'm sure you've heard it 1,000 times, probably every week. Can I pick your brain? And what I usually tell folks is, instead of saying that, when you say, "How can I help you?" And approach it from a value standpoint. So, how did you get to a position where you can partner with someone who was experienced and probably didn't need your help, since you didn't have the experience? Maybe you had money that you were bringing in and connections, but how did you approach that situation where you were coming in a position of value, where it was a mutual relationship and you can both win on that deal together?
Yeah, that's a great question. When I first started in that mentorship group, I kind of played the hey, I'm a good guy, like let's partner together. And I had a lot of people that are like, yeah, Darin, over a beer or whatever, like, yeah, we'll partner together, when the right opportunity comes, and it just didn't come, right? And I finally had somebody that kind of smacked me in the face a little bit, like, and she was like, it's exactly what you said. Like, Darin, if I have a deal, why am I going to partner with you? Like, I'm going to partner with that guy over there. He's got, 8 deals under his belt, and he can raise capital and this, and that, the other thing. And I was like, holy cow. So why would you ever partner with a new guy like me? And she's like, go find the deal. And so that's when I pivoted. I realized that that's the value I could bring was I go do all the legwork. And so that's what I did. So I would underwrite the deals. I would go out on the property tours. I would, you know, um, contact the property management companies, get the quotes for the lender. So I pretty much put everything together. Um, and then when I approached Raj Gupta, my experienced partner in the deal, I was like, look, I'm in, I think I have a really good chance of winning this deal. Do you want to partner with me? He's like, send it over the information. I had everything done, so 45-minute conversation. And he's like, yeah, I'm in. I have another property down the road. I know that area, I'm in. And so that was the value, was going and doing the legwork. So, I say to listeners, like, it doesn't matter how young or how old you are, you have value. You just have to figure out what it is. Do you want to do the hustle factor? Do you have the money? Do you have the connections, you have something.
Yeah, and so were you leveraging your mortgage contacts on finding that deal, or were you using like a different strategy of you were just hustling, contacting owners and brokers?
So in the large scale multifamily business, the brokers pretty much control like 80% of the
Yep.
market. So, um, you know, I found out who the brokers were in the Dallas. I wanted to be in the Dallas market. That's where I live. And so I found out who the brokers were, and then I started to underwrite every deal that these brokers were coming out with. And then when I found a deal that looked attractive, then I would reach out to them and go out and do a property tour, and and then decide after that whether I was going to continue to pursue it.
Yeah, and you can do that. I mean, anyone can do that. So it's
Anyone can
ultimately
do
it's
that.
just if you're wanting to break into multifamily, whether you're in single family already and you have some real estate experience or you're brand new, it's just finding that value that you can have. Now, almost anyone is going to be wanting a deal. But there are other things too. I had an operator, and she had a deal in Houston. She didn't live in Houston. She was like, "Hey, can you go check this out? Give me your feedback, and if we win, we'll partner with you on it." And it was something she needed, and she needed it quickly. And we were
So you
able
were
to.
boots on the ground for that person. That's
It,
that's another way of adding value for sure.
yeah, yeah, absolutely. So just finding that niche. So that was a 72 units.
76 unit, yeah.
Okay. And then, so from there, you went into much larger multifamily properties, or were they a
Yeah,
lot?
so from there, and so my partner asked me, like, how do you want the roles to be divided? What are you looking to do? What are you looking for me? And I was like, look, this is my first syndication deal. I really want to do everything. Um, and have you be like my board of directors, looking out over my shoulder, make sure I don't make any big mistakes. And he was great. I mean, he let me run with most things, and if he thought I was going to go down, sometimes I would say, hey, this is what I'd like to do in this situation. He'd be like, I think you may want to consider this. And I would think about it. I'm like, oh, that's smart. Let's do that. But after I did that, that syndication, I looked back and said, what do I want for my life? What do I want my life to look like going forward? What do I enjoy doing? What do I not enjoy doing? And so for me, I looked at the syndication, and I'm glad I did everything, but I don't like operations. I don't like the day to day. So, doing the weekly asset management call, I don't love that. Reviewing K1s and tax returns at the end of the year, I don't love that. Sending out the monthly, investor email, I don't love that. So I was like, well, how can I still be involved in these deals? I like these deals, but not do that. And I was like, well, I'll go partner with other syndicators. And so that's where the last 8 deals I've done have been, where the syndicator gets the deal under contract and says, hey, Darin, do you want to partner on this? And then I jump in, and I'm one of the GPs in the deal. And I enjoy that because I'm involved in deals. I'm involved in the beginning. I help raise capital, bring in, I have investors that want to get into these deals, but they're busy professionals and they don't know everybody. So it's like I'm able to give them access to something that they couldn't get into without me. And so it's been a lot of fun.
And essentially, that is the same question that we started out this interview with how can you provide value? So initially it was how can you provide value, but it was more on the operator side. Now
Right.
it's okay. I know that I know what I like and don't like. How can I provide value and not be involved in operations? And now it's a little bit more on the capital side and more strategic planning and investment advice.
Right. Exactly. And so, to listeners, I mean, it really is all about, like, first of all, you have to decide and you have to believe that you can achieve it, right? Whatever you're putting your mind to. But you have value, and there are other people that don't want to do what you're doing, that you like doing. And it can change. Like you said, in the beginning, I wanted to do it all. And then now I'm 52. My wife and I bought an RV. We want to travel. Like, I don't want to do it all. I want somebody else to run the day to day.
What are some things going into that first large multifamily that you thought would be true and ended up being very much not true?
Um, some people in the space say if you find the right deal, money will just be there magically. Like that, I don't think is true. I think that you need to, build relationships. You can have the best deal in the world if you don't have strong relationships with people where they know, like, and trust you. They're they're not going to do that deal. So, raising capital, you can start early, going out to your contacts. And some people have said, "Hey, Darin, man, well, I don't have the experience. How am I going to go to my network?" And I'm like, "Don't sell you. You're gonna partner with a property management company that has 5,000 units in your market. You're gonna partner with an attorney that's all they do is SEC syndication type multifamily deals. You're going to partner with an experienced guy, so you sell the fact that, yeah, they know that you haven't done a deal yet, right? But you're like, hey, show them a deal, what a deal looks like, and you don't even have to have a live deal. Hey, I'm looking for things that look like this, and I'm partnering with companies like this. And then all of a sudden people are like, oh, that makes sense.
Yeah, it's multifamily is definitely. I mean, really, all real estate investing is a team sport, but it's absolutely true once you get into larger projects like multifamily. So, leveraging other people's success, which you did initially as operations, but anyone can do and should do, even if you haven't done a deal, because ultimately it's those relationships and that team that's really going to be taking down the deal, not any one individual.
Right. And the other thing is that look, everybody is at different levels, like people going after their first deal. Some people want to get a 20 unit deal, a 50 unit deal, 100 unit, somebody's already got 3,000 units, there's people at all different facets. But what people have to understand is, there are people in your network that can't relate to somebody that maybe has 3,000 units already. So they don't want to learn from that person. They want to learn from the person that is just going after their first deal. So, some people think to themselves, I don't want to post on social media, or I don't want to tell my friends and family because I haven't done it yet. I want to tell them after I've done it. But those people in those network, they want to see how you did it, your journey. So share your journey.
I literally just, I don't think it's posted yet, but it was a clip. So I'll be posting it soon on TikTok, and it's an event that we did a few years ago where people are afraid to tell their journey because they're not Grant Cardone yet, or they haven't done,
Right.
1,000 units or maybe 100 unit multifamily, or they haven't bought, 20 single families. At the end of the day, in Catch Me If You Can, he taught this class, and it was like, how did you teach this class and do it proficiently? He was like, I just had to be one or two chapters ahead of the students. So
Right.
wherever you are in life, you're one or two chapters ahead of someone. So it's not really your right to judge the knowledge that you put out and your experience that you put out, because someone out there will get value from it. Not everyone, but someone will. And it's that connection that really makes an impact. And then you just do that consistently as you grow. People love watching that.
It's so true. You hit it on the head.
As an LP investor or partnering with other operators, what are some things that you're seeing in, or let's phrase it this way: when you make a decision to partner with an operator, what, or maybe the one or two things that really stand out that you have confidence in, they know what they're doing? And then on the flip side, what are a couple things that you typically see as red flags, and it's going to make it harder for you to be able to work with them?
So, everybody's going to have different criteria. I'm for the way I look at it is first the market, second the people, third the deal. So I want to be in strong growth markets. So Arizona, Texas, Florida, Georgia, Carolinas, Nashville, Colorado. So those are the kind of markets that I focus in on. If it's not in that market, I don't really care if it's a really strong operator. I'm not looking at the deal. Now they could be great deals. That's just my criteria. Second is the people. Do they have a good track record, and do I know them? Like I'm really not doing deals with people that I either don't know personally. And when I say no, I'm not saying for like a month. I mean, most likely I've known them for the last 2 or 3 years. Or I know people that know them and they have a really strong reputation. Um, so that's kind of what I'm focused on first to kind of get in the game. And then when I look at the deal, I want to have, because I come from the financing background, I want to really understand the loan. Um, that's a big factor, and a lot of deals are getting hurt right now because of interest rates going up. And I'm in some of those deals. I knew the risk, and I chose to do the deal anyway, because as an LP, because I knew the operator and wanted to get into that deal, but I knew the risk, and it's biting the deal. It's hurting cash flow because interest rates are going up. Red flags. I don't really look at red flags as much because I get a lot of deals that come through my desk. So it's more about which deals am I going to do than oh, I'm totally staying away from this one. But things like, if you're, the financing is a piece for me. And the thing about this business is that some people are going to like Chris Bounds, and some people are going to like Darin Batchelder, and some people are going to, so there's some syndicators I just click with better.
Mm-hmm.
Now, the performance on somebody else might be fantastic. They have a great track record, but I just don't click with that person as much.
Yeah.
And so I don't want to do business, and it's not just about the return. It's about, liking the people you're doing business with.
Yeah. Yeah. Because I mean, you're in a partnership agreement. I mean, it's temporary, 3, 5, 7, 10 years, but that's a marriage. And
yeah, I mean, as an LP, you don't really have that much control once you wire the funds. You're reading an email. You can call and ask questions and whatnot, but you don't really have that much input into the day-to-day operations. But when you get in, you want to know that you're working with people that will pick up your call, and that people that care about you and care about the investment capital that you're putting into the deal. So that's what I focus on.
Final question before we get into closing is
Sure.
market outlook. I'm sure your crystal ball is broken. Mine's been broken for a while. But Fed's fighting inflation, and they've been very adamant on doing everything they can to get inflation down to like 2%. At least from my observation, it seemed like maybe they thought they were on the right track, and then boom, numbers pick back up again. Which, at least on the single family side, we've seen mortgages pick back up. I mean, it's not 100% correlative, but there is some relation. So where are you seeing the multifamily market over the next 18, 24 months, as far as, well, let's not go that far out, maybe 12, 18 months, as far as valuations and buyer sentiment, this whole bridge gap between seller expectations and buyer expectations? What are you seeing?
So I talked to a lot of syndicators. A lot of syndicators seem to think that in the next 6 to 9 months, there's going to be a lot of deals that are going to be coming to market that are in trouble, because bridge loans were provided on these deals, and they were 2 or 3 year bridge loans, and they're going to be coming due. And with interest rates going up, they're not going to be able to refinance. And so they're going to have to sell at a discount. That very well could happen. I'm not really sitting there, thinking that that's hanging my hat that that's going to happen. Um, and look, all investments are cyclical. I know I've seen real estate go down, and when it goes down, it typically stays down for 1, 2, 3 years. But what I've seen since being involved in this market is that I'm a believer, like longer term, medium to longer term, that multifamily is just a fantastic asset class. So that's why I want to have a loan on the deal that's at least 5 years out. So I can, if it goes down, you could ride through that down period and come out the other side. Um, but I'm a big believer that multifamily asset values will continue to rise. We may have a dip that comes, but so I'm still bullish on it. There's a huge affordability gap right now. What does that mean? It's the gap between, okay, if you were to buy a house and put 20% down and get a 7% mortgage, what would your payment be versus, what would it cost to rent?
Yep.
And it's at all-time highs right now, that difference. So I think that you're going to have more people that are going to choose to rent because they don't have the cash down, or it's too costly to buy. And then if we go into a recession, what happens during recessions? Well, people lose their jobs, they can't afford the mortgage, they sell the house, and then they have to go and rent. So I'm a believer that fundamentals support multifamily going forward, but I'm also a realist that there could be, a downturn.
Yeah. That's kind of been my sentiment. It's the long term outlook seems very favorable, just with supply and demand and just basic fundamentals with housing and affordability. But the short term, debt's really the challenge, is
Yeah,
managing the debt.
that's the challenge. And what I've seen people getting deals done today are, a lot of people are doing deals with, assuming
Yep.
the loans on other deals.
Mm-hmm.
And what I would tell listeners is, it's probably a great time for first time investors because there's not as much competition. There's a lot of people that have pulled back and they're like, hey, I don't, I'm going to wait until the dust settles. Well, when the dust settles, everybody piles back in. And then you, as the first time investor, are going to be at the back of the line.
Yeah.
Like the broker's not going to pick you. But right now, they're spending time with a lot more buying groups because there's, a lot of people have backed off.
Yeah, I would imagine that'd be especially true with small multifamily, with mom and pop owners too, especially owners that are retiring.
Absolutely. I'm not in that creative finance world, but in the small multifamily, I mean, it may be an opportunity to get sellers to do seller financing,
Mm-hmm.
and so you have to put less money down and you get into the deal, you solve their problem. They want to get out and they can't because of the finance markets and you give them their price, but they do seller financing.
Yep. All right. So these final 4 questions asked to everyone.
Okay.
Starting off, if you could give advice to your 20-year-old self, what would that be?
Buy real estate. My son is about to graduate A&M, and I heard this on another podcast, which I wish I had done this. They said, you're only a first time home buyer once, right? And you can get an FHA loan for like 3.5% down. Well, rather than buying your first house, or go and buy a duplex or threeplex or fourplex, live in one unit. You only have to live in it for a year, then you can move out. And now you have your first investment property right out of the gate with 3.5% down.
Yeah.
When, typically you're asked to bring in 20% or more.
Yeah. Yeah. The house hacking model. I mean, you can do that with single family too. The house hacking where you're a live in flip. Man, I would never want to personally do that. But I know people have done that and then 2 years later or whatever the rules are on the mortgage, then sell it, tax-free gains, do it again.
I mean, it's just crazy when, if you're 20 something years old, I'm 52, like 30 some odd years of compounding gains. Like that's crazy. I recently was in Florida and I saw somebody that was in my neighborhood, that my old neighborhood, and they said, you know what your house is worth now? And we sold it for like 430, and it's $1 million house now.
Yeah.
Like had I just held on and rented it, that's
Better
another
not to look at those numbers.
600 grand. Yeah. But that's what I would tell my 20-year-old self, buy real estate. Yes, for sure.
What book or books have greatly influenced your life?
And I love to read. There's so many books. I recently did an interview with the co-author of The Go-Giver. That was a great book. It was written as a parable. Basically, it was talking about giving is better than receiving. If you give to people, they're more apt to want to help you and give you what you want. So that's a great book, and it's a very easy read.
I've heard of it. I haven't read that. Have you read Giftology?
No, is that a good one?
Very good one. It approaches it a little bit more on the sales standpoint, but it's the same thing. It's the same concept of reciprocity, but it's very tactical.
Awesome.
In the last 5 years, what new behavior, belief, or habit has most improved your life?
That's interesting. So when I read books, I'm trying to grab some nuggets from them, and then actually not just read it and be like, oh, that's great, but actually apply it to my life. Right. And so, I'm trying to, one of them I recently read was Hal Elrod's book, Miracle Morning.
Yep.
And I bought the book, and I didn't read it for a long time because I kind of thought it was going to be like, get up, make your bed, you're going to feel good about yourself, and I just didn't want to read that book.
Yeah.
But instead it was great because it kind of structured your morning in like 4 or 5 different areas. And so I started to form that habit of doing that. And I incorporated reading one chapter of the Bible in that. And, just having structure in the morning is very helpful, I find.
Yeah, no, I found that book very impactful. It's tactical. It's a fast read, but love that book. How can people reach out to you?
2 ways. If you want to, I have a podcast also. If you want to learn about the podcast, you can go to darinbatchelder.com. If you are interested in investing in multifamily as a limited partner, you can go to dbprivateequity.com.
Love it. Thank you very much, Darin, and look forward to meeting with you in person since we're not too far away.
Yeah, absolutely. Another Texan. So I look forward to it. So I appreciate you having me on.
Absolutely. Thanks for coming on. Thanks for tuning in. If you got any value out of this at all, please like, comment, subscribe, follow. I'd love to hear from you. And for more real estate related content, market observations, upcoming events, you can go to investedx.com and subscribe to our weekly newsletter. I promise you won't regret it. Thanks again.